Today, we will be discussing horizontal analysis. A horizontal analysis is a comparison of a company's financial information across two or more periods, requiring us to look horizontally between the years on the relevant financial statements. The three types of horizontal analysis that we will be discussing are dollar change, percentage change, and trend percentages. First, we will look at an example of calculating dollar and percent change given comparative balance sheets, and then we will explore a separate example for trend percentages based on income statement items. Here we have the comparative balance sheets for Ellison Enterprises in 2020 and 2019. Before we start doing calculations, we have to decide which will be the analysis period year and which will be the base year. The base year is almost always the earliest year in the analysis, so we will let 2019 be the base year and 2020 be the analysis year. The dollar change can be found by taking the analysis period amount and subtracting the base period amount. Looking at cash, we have $44,000 minus $34,000, which equals a $10,000 change. For accounts receivable, we have $23,000 minus $29,000, which equals a negative $6,000 change. We can continue with the same process for the entire balance sheet, including the totals. For each item, we are simply taking the 2020 amount and subtracting the 2019 amount to get the dollar change. Next, we can find the percentage change by taking the dollar change and dividing by the base period amount. If you want the percentage, you can multiply the result by 100. For cash, we have the $10,000 change divided by the $34,000 base period amount. This equals approximately 0.29, which is the same as 29% if you multiply 0.29 by 100. For accounts receivable, we have a negative $6,000 divided by $29,000, which equals 0.21 if you round to two decimal places, which equates to a 21% decrease in accounts receivable. We can continue with the same process for the remaining accounts to get the following percentage changes. For each item, we are simply taking the dollar change and dividing by the 2019 amount. Dollar change and percentage change calculations can help us see how individual items on financial statements have changed from one period to the next. For example, we can see that assets are slightly up from 2019 to 2020, 3% or $5,000, whereas liabilities are quite a bit down, 22% less than they were in 2019. Equity is up 12% and retained earnings is up 57%, which might suggest a high net income. We calculated dollar change and percentage change based on a balance sheet, but you could also do it using other financial statements, such as an income statement. Okay, the final form of horizontal analysis we will discuss is what are called trend percentages. Here we have a few items from an income statement that we want to analyze for the years 2016 through 2020, which include sales, cost of goods sold, and net income. Trend percentages help us determine how these important accounts are changing throughout the years. Again, we need to define a base year, which is almost always the earliest year of the analysis, in this case 2016. The analysis years will be 2017 through 2020. When you are analyzing several years as we are here, it can be helpful to create another table with the accounts you'll be analyzing, which we have here. To find the trend percentage, we take the analysis period amount and divide by the base period amount. Starting with the 2020 sales, we have 25,000 divided by 20,000, which equals 1.25 or 125%. Then we have 26,000 divided by 20,000, which equals 1.3 or 130%. 24,000 divided by 20,000 is 1.2 or 120%, and 22,000 divided by 20,000 equals 1.1 or 110%. Finally, we can also do the last year here. 20,000 divided by 20,000 for 2016 is just 100%. The base year will always just be 100%. We can do the same thing for cost of goods sold and net income. Pause the video and see if you can get the remaining trend percentages. We will be back with the answers in just a moment. Okay, we are back with the answers to the trend percentages. Remember, we are just dividing each analysis period amount by the base period amount from 2016. The percentages are all rounded to the nearest whole percent. Analyzing these percentages can help us see how our sales and income have changed compared to cost of goods sold. We see that cost of goods sold increased to a maximum of 130% of the 2016 base in 2019, but net income increased to a 150% max in that same year. This is a good thing. It appears that income is rising more than cost of goods sold is. Okay, that wraps up our video on horizontal analysis. Join us in the next video for a look at vertical analysis.